on, and of course, I want to take this opportunity. Now, sector-wise, we have also seen that, the sector agnostic remain the most prominent approach to investors on the continent, specifically angel investors. They tend to diverse their portfolio by investing in various sectors. But we also seen that fintech, agri-tech, edutech, health tech are some of the sectors that have tend to kind of attract the attention of early stage investors, specifically angel investors. And since the beginning of this year, what I've noticed is that angel investors, individual investors, are becoming and moving a little bit away from sector agnostic approach to sector specific approach. So by the end of this year, you will see a higher rise on investment deployed in companies that are very specific into various sectors on the continent, driven by groups and individual networks that are specifically focusing on these sectors. And in terms of the business stage that they're looking into are mostly the pre-seed. You see that 40% of capital deployed focuses on pre-seed. These are companies that may not have generated revenue, but have proven or shown at least a minimum viable product that seems to be compelling to the angels to support. And we see that very few angels would involve in Series A. And of course, the reason being that at the level of Series A, the value of these companies are already so high that if there's any exit, the contribution portion will be very much diluted compared to these Series A investors. So you will see that a lot of angel investors come at pre-seed or at most at seed level. And it's really at that stage where the support of angel investors are very much needed. Now, in terms of the type of investment, equity remains the leading type of investment that we are observing on the continent, and followed by blended finance, and we have a little bit of debt and other form of investment that is happening. In terms of investment instruments, we still have equities and shareholders agreement leading the chart. But however, we also observe that a simplified agreement for future equity has been emerging very fast, and all the various ecosystems across the continent have found it extremely easy to actually deploy investment using SAFE as an instrument. And how they find this company is very interesting as well. And a lot of these angels have actually indicated that they rely on the personal network and referral. And the second pathway to actually finding companies are Innovation Hub. And you know very well that with the help and the work of AfriLabs across the continent, we have seen a lot of Innovation Hub emerging across the continent, helping to build the foundational kind of aspect of those companies that are emerging. So innovation hubs are very important, and a lot of angel investors as well as angel network rely heavily on Innovation Hub as a source of investable pipeline. And when we ask angel investors, what are your motivations? Most of them will say that they do this for social impact. But what does that mean? And we have found out that when it comes to social impact, they're looking at how many jobs can we create? Can we use angel investing by supporting those companies that are emerging so that they can create jobs? Can we use angel investing as a tool to support those companies so that they can eradicate poverty? This is what they mean by when they say social impact. But they also talked about youth and women empowerment. As you know very well, there are gaps that are currently being closed by different stakeholders across our countries on the continent. And youth and women empowerment has become one of the most important aspects that these actors are looking into. So most of our angel investors as well are very much concerned with these issues, and they have deliberately taken steps to support youth and women empowerment by making sure that they have access to the needed capital and the support and network that will allow them to excel as they start their journey. So in the way, we also looked at how do actually these angel investors do invest, right? And we have had a mixed kind of result. First of all, the majority of our angel investors have stated that they use a combination of 2 or more methods. Some of these methods include investing on their own, which means that they will identify a deal and then go ahead and invest on their own without necessarily being part of an angel network or an angel syndicate or the like. But we also have a significant portion that have stated that they use syndicate, collective, angel network, angel groups to actually support and deploy capital. And one of the advantages that we have noted in using a group is that you are de-risking your own investment. Let's say, for example, the capital amount or the capital required by the startup is about 100K. Instead of you as an individual deploying the 100K, you can actually deploy only 5K, knowing that other individuals involved in the group will also deploy their own portion that will make it to the 100K. So that's one thing, de-risking your own investment. And you also de-risk by making sure that if you're pulling together a number of individuals that are supporting in this deal, they can equally support by providing expertise and also extended network for the startup to benefit and grow further. Before we move to the poll, I would like to introduce Joe Kinvi. And Joe Kinvi is an ex-Stripe and ex-Paystack, is an individual who has done a lot in supporting innovations on the continent and making sure that not only they can create a pool of individual investors willing to come together to invest. And he has done that under the umbrella of HOAQ. And HOAQ is essentially a diasporan angel network based out of London with multiple activities across the continent. And Joe has been acting as a co-founder. And apart from that, Joe has also been very much active in making sure that the startup founders do have access to the much needed capacity building programs that will help them attract early stage investors, angel investors, and VC alike. So welcome, Joe, and it's a great honor to have you today with us.
Thank you for having me, Fidel. Hey folks, my name is Joe Kinvi. Fidel, thank you so much for such a great intro. Can people maybe just give me some reaction at the bottom and just tell me that you can see me fine and you can hear me fine? Can folks see me and hear me okay?
Hey, Joe, yeah, can hear you clearly.
All right, thank you. Yeah, so I'm Joe Kinvi. I am one of the co-founders of HOAQ, which is an angel network or an angel community based. Well, I am based out of London, but HOAQ has been online since we started in March 2020. Next slide, please. Well, who are we? Before even I tell you who we are, and let me just make sure I'm on time. We we were thinking about, joining an angel network back in, early 2020 when the pandemic was starting. And we couldn't find one to join because a lot of them were very expensive. Quite a few of them were quite restrictive, and there wasn't enough clarity around, how can we, folks in the diaspora, how can we invest from where we are on the continent? And we got on this journey to start our own. And essentially, HOAQ, we are a community of creators, operators, and founders who come together to back entrepreneurs building for Africa and the diaspora. And the reason this mission statement has evolved over time because a lot of us were Black people. Back then, I was living in Ireland, and we wanted to start with invest in Black people, but it turned out that it's not just Black people or Africans that build in Africa. There's a lot of people who really, really care about the continent. And there's also a lot of people outside of the continent building for the diaspora or the global economy. And we wanted to come together and back them. How? Well, first and foremost, we deploy capital. But because many of us we're relatively young, between, I don't know, 25 and 45, spread across the world, we wanted to use our network on top of the money to support a lot of the founders that we've been backing. Next slide, please. Well, yeah, we wanted to become angels. It was quite challenging because there wasn't a lot of information out there for diasporans who want to invest across the continent. We spent a lot of months trying to figure out structures, where we should invest or how we should invest. And yeah, we figured it out. We spoke to a ton of people who are doing or have done it. So that's how we started. We wanted to enable ourselves as angels, and in turn enable as many other angels who are like us, like-minded, who are mostly professionals and want to deploy some of their personal capital into the angel investing masterclass and learn along the way. We also realized early in the days that the capital is not sufficient and it's not enough, and there is a lot more support that founders need on that journey. And one thing that we've done really well over the past couple of years is pretty much connect founders to each other in the network, connect them to great talents that we have. We recently launched what you call HOAQ Talent, which is making more talent available to the founders, because outside of the capital, one thing that they need immediately is to hire people. And for a lot of the African companies, getting access to that talent can be difficult. And for folks in parts of the world, such as Nigeria, we've seen a lot of talent leaving the continent. So founders are having that challenge, and something that we've been actively supporting them with. Next slide, please. Yeah, well, how do we invest? I think every angel network or community needs some sort of investment thesis. We are very focused on technical founders for mostly two reasons. They can build, and also they have relatively low cost, because what they are using is primarily their time, and they don't need to go out and hire a ton of engineers because they know how to build. We also target, or as part of our thesis, we really focus on our large market size, because we believe that if founders are building for a great market size, the outcome can be quite large. And we pay attention to really the size of the market when we're talking to them. And we also look at traction. So we don't do anything that's pre-revenue. Now, traction can be interpreted in different ways, but traction is essentially that, well, can these guys show that this idea that they have can be materialized, or can somebody pay them for it? We've had situations where we invested in founders that don't have paid customers, but they're doing trials with some potential customers. So that's also qualifies as traction. They have some MVP that's working. There's some appetite from customers who want to use this, and we pay attention to this when we're talking to potential companies we want to invest in. Well, what's in it for investors? This is kind of obvious. Any investor who's put capital to use want, well, first thing first, at least in our community, they want a return on their investment, which I think any decent investor want money back. Purpose, right? Purpose, there's a lot of folks like me who want to have that sense of purpose and back founders who are doing great for the continent. And while some of us can't be there, we want to be able to, back them with capital and more. And finally, I've mentioned a couple of times, which is we really want to enable as many investors as possible. And we position HOAQ as your starting point when you become an angel. So what we do is on a regular basis, we bring a lot of investment opportunities. We do what you call Meet the Founder session. We've built what you call a HOAQ Academy, which is for folks who don't really know about angel investing to come and learn and practice with us. So the enablement part is really, really important. Angel investing, the act of doing, it's something that's very powerful, but you also learn a ton by doing. So one thing I've been saying is if you want to learn about the property sector in Kenya, you go find a company to invest in Kenya that's in that space. You'll learn very quickly. And angel investing is the way I've learned. I've done about 40 investments to date, and I've learned a ton about so many sectors that I wouldn't have learned if I didn't put capital to use. Next slide, please. Yeah, well, we've been doing this for quite a while, and this is what the progress looks like. We've invested in over 90 companies. We've deployed about 3.5 million at this time since 2020. We've got about 700 investors in our community. And because we focus on the diaspora, you have people across the globe, literally. And as a matter of fact, we've got investors in over 35 countries. I think it's 37. We had a member that joined us from Japan recently, and that was quite exciting. We've also had exits, which is something that a lot of investors should be asking for, which is, well, I put this money in, what do I get back? We've had at least 3 exits, 2 companies in Nigeria and 1 in the UK recently. A company called Baseline that sold to Cloudflare, which is a NASDAQ listed company in the US. And so that was quite exciting. That is to say that we don't just invest in Africa, we also invest in the diaspora. And these are the countries that we've invested in since we started. Next slide, please. Well, who are our members, or our members? How do we attract them? If you don't already follow us, do check us out. We are quite active online, LinkedIn, Twitter, Instagram. We post a lot of videos. We host a lot of webinars online. We do a lot of events in person. This year so far, we've done 2 events in London in person. We do a lot of content marketing. We do Meet the Founder sessions regularly. This year, we probably did an average of 1 every 2 weeks so far. And as we're going into H2, we're really thinking about how do we enable our investors to engage with our founders. And this is something that we've seen that's appealing to potential investors. Well, ideal member profile: you're passionate about Africa and its growth. You're a new angel who wants to learn. Or you're an experienced angel and who's financially capable to commit to deals and pay annual membership. So yeah, next slide, please. Before I go into this slide, our community, and you'll see that a lot of syndicates out there have some sort of pricing structure. I don't know if that slide is still there. I took it out. But yeah, we charge a very, very low membership. It's $100 per annum, and we charge per transaction fee. So it's super easy. Well, through our research, at least back in 2020, we spent quite a lot of time to figure out how do we structure HOAQ from a compliance and legal perspective. And we landed on a structure that's called bear trust structure. Essentially, how it works is you have all the angels. All the angels pull the capital together. You set up an investment company. It's a quote unquote trust. And this trust makes all the investments on behalf of the angels. And what that looks like is the investment company issues investment documents to the angels to say that, hey, this company that you invested in, I'm holding in trust for you. You are still the ultimate beneficial owner. And anything that has to do with that investment, we hold it for you. And then the investment company in turn signs, the shareholder agreement, the SAFE with the portfolio company. That it's super easy, it's clean, and it's also very tax efficient, although I can't give tax advice. So HOAQ is it's more than just a syndicate or club. We started with a club, but then we also have a small fund. It's our first fund. A lady called Yewande runs it, and we've also done a couple of investments through the fund. Outside of HOAQ, what I actually do full time is I build technology for communities or syndicates, right? And we believe at a platform that we need at least 1,000 HOAQs out there in order to deploy as much capital to the continent as possible, but also the diaspora. And on the next slide, I'll just touch on platform really quickly. Yeah, well, we're building a platform to make it possible for investment communities to organize and co-invest in a bunch of asset classes. It's not just the angel asset class or the startup asset class. There's so many asset classes out there that folks want to invest in. So real estate, debt, asset financing, film, movies. And yeah, so that's what I'm focusing on full time. I really, really believe that it's something that's needed. There's a lot of tools out there that just don't work for Africa and the diaspora. And yeah, we're building it. It's live with HOAQ. So if you're a HOAQ member, you are actually already using platform, and the screenshot there, it's from platform. And yeah, whether you're part of a community that needs tools to use, we're happy to talk about it. But that's not what I came here to talk about. It's all about HOAQ. I will stay on until the end of all the presentations, and I'm more than happy to answer any specific questions that you may have. Thank you all for having me.
Thank you so much, Joe. Joe mentioned he'll be on right till the end. So if you do have any questions about HOAQ or their structure or the platform activity, please make sure to just drop the questions for us in the chat, and then we'll make sure to round them up and have everyone answer at the end. So moving along swiftly to Rising Tide Africa, I'd like to bring up Rolayo to take us through Rising Tide Africa. Take it away, Rolayo.
All right, fantastic. Hello, everyone. Good afternoon. It's a pleasure to be here. And I'm speaking as a member of Rising Tide Africa. So Rising Tide Africa, we're a group of female angel investors, and we focus on technology businesses or technology-driven businesses, ideally female-founded or female-led. Can we go to the next slide, please? So let's just do a quick intro. So Rising Tide, essentially, so this was co-founded by Yemi Kerry and Ndidi Edozie. And the whole point was for us to look at the various asset classes that are available to women, right? We started up in Nigeria, but now we've gone through different parts of Africa and different parts of the world. And the whole idea is to see angel investing as an asset class. And I like what Joe has said earlier in terms of getting the returns. It's an asset class, and the end goal is to invest in more female founders. So at Rising Tide, we have a specific focus on driving investments for female founders. That doesn't mean that's all we're investing, but there's a focus in that area. And the ethos is to ensure that we reduce the gender funding gap for female entrepreneurs, because we realize that we have to be quite intentional about making this happen. And so to drive this, we have what we call 4 mind pillars, as we call it. So there's mentorship, right? There's the actual investments, there's networking and education. So I think it was Fadila that mentioned earlier, the difference between an angel investor and any other person is that because the angel investor is business growth, right? And many times we see businesses that are neither pre-seed or seed stage, and they still require some mentoring to get into a state where they're more investment ready, right? Where they can take a lot more investment. And so that's where the mentoring comes in. There's some businesses that are up and running, but some require some level of mentorship to get to where they need to get to. Then we have the actual investment process, right? And to date, we've invested about $3 million in about 30 odd deals. Yes, 30 odd deals across, I say about 11 different sectors across sub-Saharan Africa. So majority of the deals have been in Nigeria, but we've gone across sub-Saharan Africa and even outside of Africa as well, some in the UK and the US, okay? And then for membership, so Rising Tide right now, we're about 103 members. That's purely female, so it's a total female angel investment team. And we have a number of activities that we put in place for networking. We have deal days on a monthly basis, to the point that that Joe had mentioned about interacting between the founders, deal sourcing. So we have deals on a monthly basis, but beyond that, we also have training sessions, engagement sessions, networking sessions, for our members to keep the network active. And then we also have education, the education pillar. What we're also seeing is that there's some businesses that are not necessarily pre-seed, but they need that jump, that little oomph, right, for acceleration. And so that's where the education comes in. So we actually have an accelerator program. We run 4 cohorts to date, and we've graduated about 80 businesses, again, for the female founders, female funded or female founded businesses, 80 cohorts, 80 people today, rather. And we're quite excited about that. So 80 people across 11 different countries. So this is quite exciting because we've seen that it actually works. Now, what's our investment structure? Can we go to the next slide? So similar to what Joe had said, the main challenge has been, I guess, with angel investing is actually the deal sourcing. How do you get the good deals? Because you're coming in at such an early stage. How do you identify something that is actually worth investing in? And so most of the deals that we invest in either coming by referral, and either by referral through a member or someone else that knows a member, or through the investment or education pillars. So this is why we see that education pillar is quite important. The mentoring pillars are quite important. So the business may not be ready from day one, but we get them to the stage where they're actually investment ready. When they are investment ready, we present them to the rest of the members. Now, what we go through during the deal day process is that there's a 15-point scoring system that we actually say, okay, yes, no, and there's a minimum grade that every business must come through. Once it comes through that minimum grade, minimum of 11. Sometimes it be, there could be exceptions, right? Depending on what we see in terms of the founder, the solution being offered. But typically, it's, we go by this 15-point grading system. Now, if we see that it actually takes those boxes, then we go to a mini due diligence process, right? And then once it scales that stage, then come to the deal day. Okay, so it's at the deal day, the businesses come and they pitch. They have about 15 minutes in all, 10 minutes for the pitch, 15 minutes for the question, rather 5 minutes for the questions. And then we then establish across the members, is this something we want to take forward? So it's always very inclusive, always very engaging. So no one takes decisions on behalf of everyone else. We all have to be, there has to be a minimum number of people that want to go ahead with the deal. At the outset, and I found it very interesting as Joe was speaking, I see many similarities. At the outset, what we're doing was making investments through, special purpose vehicles, SPVs. So the members will subscribe individually and directly into that SPV, but it became quite cumbersome, as you can imagine. So what we've done is that we've evolved, right, to now have a master syndicate agreement that gives RTA the power of attorney, and then, the investments are done through that particular syndicate. Right, so the investing members then sign a subscription agreement for each individual investment. They commit their funds through that, particular vehicle, and then, RTA does the funding and does the investment on their behalf. Right, so the founders also sign a side letter committing to provide the necessary updates, everything that's required on a frequency that's agreed, between both parties. So we found that we've had to evolve over time from doing it one by one, but as we've grown, so you can imagine, as we continue to grow, so we found that this has been more efficient. Process-wise, procedure-wise, legal-wise, tax-wise, it's just a bit more efficient to go in this direction. Can we go to the next slide, please? Okay. Now, post-investment, I think is where the rubber hits the road, because we're not a VC, this is not a fixed deposit or anything like that. We actually have to help the businesses run because we're coming in at such an early stage. And as we know, with angel investing, 99.99% of the time, an exit has to be engineered, right? So you have to actually grow the business to the state where you can actually get an exit. And so what happens is that, remember I mentioned earlier that there is a team that comes together to do the due diligence. So there's a lead that is appointed for each deal, and the lead is one of our members. So that lead is now going to be the one that, continues the relationship between the entrepreneur, and between the rising tide, between the team, everybody that needs to be involved. So there's a lead. And then what we also bring in is the mentoring pillar, so we can actually help the business grow to the point where they're attractive, that business is attractive, to other businesses, so where they can actually scale, right? So whether it's one-on-one sessions, whether it's hand-holding, networking open doors for them. So we're quite intentional, quite strategic, right, about helping the businesses grow. So it's not just we've invested and wait and see. We actually roll up our sleeves and handhold them. And that's where the network becomes quite useful, because if you look at the average experience of the average RTA member, they're quite, very well experienced, lady bosses, so there's a lot of experience that comes in, okay? And then what we also do is that the investees are also invited to our events and ecosystem activities. So there's always that engagement between, the portfolio companies and the members. And so today we've had one exit, but that was triggered by an acquisition. But we've also gotten to the point where we're seeing that based on the size of our portfolio now, where we see we've reached the point of maturity where we need to engineer more exits, and we're getting to that point because we know that, we have this ethos and we know that angel investing is, a viable asset class, and also our members expect the returns as well, right? And so to prove that proof of concept, that viability, we're actually pushing for more, or rather I'll say engineering more exits. As I said, Rising Tide understands that any exit has to be engineered. It's not just going to happen. So can we go to the next slide, please? So I invested in the investment pillar. So I mentioned earlier that we invested close to $2 million in over 34 companies. Now, so it's been an interesting couple of years, and I think we've all experienced this interesting year, especially since 2022, right? When the bubble sort of burst. But in spite of that, we're still seeing the deals. And I think what has helped us is the fact that I mentioned earlier that we don't just invest in technology. So it's not just, when we say technology, it's not the fintech businesses, but technology leveraged businesses. So whether it's in agri sector, it's in health, it's in commerce, it's in lifestyle, right? So that portfolio, the fact that we have a diversified portfolio has really helped, okay, has really helped us in terms of, staying afloat. Still having deals to invest in. So maybe not as much as we were doing before, but the deals are still there despite these challenges. And we're still committed to supporting women entrepreneurs. They're still there, they still require the support, and probably even more so now, right, at these difficult times, in the world, and in particular, I'll say in Africa. So can we go to the next slide? So I've been talking about the sector. So this gives you a sense of the various sectors that we invest in. So there's media entertainment, there's the fintech, there's health tech, lifestyle, mobility, agri-tech, e-commerce, so we see a whole gamut of different types of businesses and different opportunities. And what was exploring, opportunities. And I said, beyond we're not just putting the money in there, we're actually working with these businesses and growing these businesses. So we're very actively involved, right, in everything that's going on in these areas. Can we go to the next slide? So right now, for our membership, right, so we have 103 highly distinguished members, super proud of all, every RTA member with an average working experience, I'll say about 35 years. So these are very, very experienced ladies, and they're actively engaged. So whether it's monthly activities, curated activities on a quarterly basis, we have something coming up in a couple of days. We have a deal day in about a couple of days on Thursday, yes. And so how does one join Rising Tide? So admission is either by introduction from an existing member or upon request to join, but it's easier, if you're coming through an existing member, and the person must be endorsed by an existing member. So we know who is it, because it's a network and there's a level of trust that's in there. We must ensure that we're all the same mindset. We understand what we're doing, recognize the fact that, angel investing is patient capital, right? And we're also ready to be very involved and to actually help the businesses grow. As I said, it's not any exit that we want to see has to be intentionally and actively engineered, right? So we have members evenings, we have monthly investment meetings, we have dinners, so it's not all work, we let our hair down. We have an ecosystem gathering, ecosystem network things, and we also partner with all the other networks as well, other angel networks as well, or other parties, so a lot of collaboration that goes on in there. There's the next slide. And so because of that, we've also seen that there's an opportunity for us to have a fund, and we're set to launch a $10 million fund with a focus on post-revenue and pre-profit companies. What we're seeing is that there's also an opportunity to fund growth stage. So, for angel investing, we're doing seed or pre-seed, but there's also a growth opportunity in here, right? But this is going to be de-risked and it's an enriched investment. So we know we are going to make sure we're doing all the necessary due diligence in the terms of the type of companies that we are going to invest in, right? Exactly. We've got done co-investments with HOAQ as well. In terms of the focus sectors that we're focusing on, there's going to be strategic sectors, right? So we can get the necessary returns that we'd like to get. So for the investment considerations, the type of businesses we're looking at are post-money valuation capped at $5 million. We're looking at, they have an MVP, there's a service that's already making traction, they're already generating revenue. As I said, it's about growth, right? So this is a growth fund, not a startup fund, right? And we're looking at the competence of the founding team, the exit potential, you know, and all that. So what we're trying to do at Rising Tide is to see that we're actually with the female entrepreneurs from the pre-seed to seed stage to growth stage, right? And so that we're actually actively involved in making sure that we're turning around at least the way female entrepreneurs are being seen, and more importantly, are being funded, you know, in Africa specifically. Can we go to the next slide, which I think is the last one? So there's actually a case study that's been done on Rising Tide about investing the gender lens. So if you want to take out your phones, I can scan the QR code. You can download that case study. It was developed by the African Angel Academy. And it just looked at what we've done and how we've sort of contributed to reducing the equity funding gap, right, from 56 times to 36 times. Now, we're not there yet. There's still a lot of work to be done, which is why we're looking at different areas and different avenues and different vehicles, right, to target this challenge. Now, having said that, that doesn't mean RTA only invests in female-funded businesses, no, but that is our focus. And when it comes to growing businesses and mentoring and education, they're specifically focused at female-funded, female-run, and female entrepreneurs. So I'll also be around if anyone has any questions and wants any more information on Rising Tide, and we are happy to welcome you on board. Thank you very much.
Thank you so much, Rolayo. And that was Rising Tide Africa. As she mentioned, please feel free to go on their website and to check out the case study that was really written. It's really great to have written resources so that we can continue the learning practices of how these organizations have been built by us, for us on the continent. So moving on to our last presentation, as I mentioned, please drop any questions that you have in the chat, and we will definitely have a bit of a roundtable with Rolayo, with Joe, and with the upcoming Core Angels at the end. So I will hand it over to you, Cintia, so that you can kick us off on this last leg.
Okay, thank you so much. Thank you for having me. It's been amazing to listen from the other networks as well, because there are many things that we are facing in a very similar way. And this is why we all believe in Core Angels and joining forces to fund the early stage. So please, Core Angels, who we are a network of angel funds. Okay, we are present in many countries, but all of them, our angels, they get together and they invest in portfolios. So they invest in a common group of startups where they decide collectively where they are going to invest, in which companies they are going to invest. So instead of, we have leaders in each fund, but the decision makers are the angels investing their money in the startups. One more, please. So our model is based in 3 pillars. Basically, as I mentioned before, investing in portfolio, as this reduces significantly the risk associated to investing in startups. Not only this, but also it facilitates the engagement of angels with startups after the investment is made. So we truly believe in a model where angels contribute and are actively involved with the founders. So having mentorship very frequent with our founders. Many research and many studies, they show that this has a huge impact in the trajectory of the startup. Specifically, when you're talking about early stage, in Core Angels, our angel funds, they invest basically in pre-seed and seed stage. Some deals can go up to pre-Series A or get some part of Series A, but mostly pre-seed and seed. And in these stages, it's extremely important that angels are really getting together, knowing what's going on, knowing about the challenges, not only receiving reports and good news, but listening to founders, understanding the challenges and helping them overcome those challenges. And also, we are right now in this map, we are 11 angel funds that are active. It means that they are distributed in different countries, as you may see. The ones with the star are the 5 that we are preparing to be launched this year, so growing the network to 16 by the end of the year, hopefully. And all of them operate with the same model, but they have different investment theses. So just as an example, we have in Europe, we have Core Angels Lisbon, just an example. Or in Africa, we have Core Angels Middle East and Africa. The investment thesis is geographic, but it's industry agnostic, okay? But we also have verticals like edutech, like agri-food, like climate, that are investing in a particular industry where the angels will be supporting the founders in that particular industry. One more, please. In numbers today, as I said, we are 11 active angel funds. We have invested in more than 90 startups. Currently, we are, I think it's 280 or something, but more than 260 angels present in 15. I think we're almost about 20 different countries. So the angels, they can be spread in different countries investing in these angel funds. One more, please. Why the startups they choose us? We have one important factor is that as we have this global reach, as we have this global network of funds, all of them are operating the same way, and it's becoming more frequent that we have different angel funds investing in the same startup, so co-investing in a same startup, and this helps a lot the founders when they are designing and planning their expansion projects, so to expand to other markets. Besides this, having real mentorship engagement of the angels with the founders, a relationship based on trust. We understand in Core Angels that this is a long-term relationship, and because of that, specifically in the early stage, it's very important that the angels build this relation through the time and build it on trust, clear communication, and frequent engagement. And one more, please. And why do angels choose us? So we provide a real angel experience. So although we are funds, although we have the structure of building portfolios, this is not like a typical VC fund where LPs invest their money and the fund managers are the ones engaging with the startups. So in our model, angels, they can participate as much as they want, as much as they are available. And we have some mechanisms in place to guarantee that they have access to founders, to the strategic plans of the startups, and that we have constant events, community webinars, training, to make sure that they can not only interact with the founders, but be prepared to help them in the coming challenges. Also, they choose us because, just one before. They choose us because of the portfolio strategy. So we all know that investing in the early stage is a risk asset, and having the portfolio, and not only reducing the risk, but also having the convenience of having leaders bringing deal flow, assessing good deals, and helping them after with paperwork, contracting, etc. And the possibility of reaching out to global investment opportunities. So once you were a member of Core Angels, you were exposed to many of our funds and can be discussing with our leaders potential investments in other countries, in other markets. I will bring now Maha Mandour. I would like to have Maha now with me. She will deep dive a little bit in Core Angels, Middle East and Africa, which is much more suitable for the scope of this masterclass. Maha is our managing partner in Core Angels, Middle East and Africa. She's been doing an amazing work in articulating all the partners in the region and bringing investors to fund our startups in that region. Maha.
Hello, everyone. Thank you, Cintia, for your introduction. Before I start Core Angel, Maya, I would like to thank ABAN team for the great webinar and the opportunity to networking with everyone. Core Angel, Maya, I believe that we are the latest member in ABAN network, and since then I have been finding that it's bringing a lot of benefits for us to be part of ABAN network. Our fund is one of the funders, a member of Core Angel International, and one of the 11 or 15 funds now that Cintia has been mentioning. We started the fund almost 1 year ago now. Before that, we were leading a venture builder company and venture builder corporate. And we have been working a lot with the startup in the ideation, since from the ideation phase to the pre-seed stage. And we have found that the startup is not always looking for services like what is offered by incubator and accelerator. However, they need more engagement from the ecosystem contributors. We own a venture studio. However, we find that they also need a fund. And here from 2021, we have the pleasure to collaborate with Core Angel International. And what we like about the model of Core Angel International that now we represented through Core Angel Mea, like Cintia said, that our business angels is active contribution in the startups. So we are not leaving our startups only, providing them only with a fund, but we are there for them, providing hands-on guidance. We incorporated our fund in USA, in Delaware. However, we are operating from Middle East. I am located in Egypt, and we have been operating Core Angel Mea through a network of venture partners in the countries that have a high potential for the startup and the entrepreneurs. Next, please. Our strategy, as I have mentioned, is providing the startup with a fund and hands-on guidance through a venture studio-backed ecosystem. Through the venture studio backed ecosystem, we create a funnel that can mitigate a risk for our angel investors. How we can do that? We provide the startups. We always there for the startups. We provide them with venture development services, so that we are actively managing them through reporting, quarterly reporting, providing them with services in the innovation, opportunities to expand in the markets they are operating in, and also we providing them with hands-on guidance in the technology field. Next, please. So, as an angel investor with us, the angel investor have a lot of benefits that can be provided through joining our community. Of course, our structure is a company structure, so that all our business angels are having a share in Core Angel Mea, and all of them is having a shares in our portfolio company. The ticket size is ranging from 25K to 200K USD, and we give a priority for the seniority in the gaining, in the gaining. Of course, joining the network will provide also the access for Core Angels community, and I will come for the ARC angle rule opportunity in the next slide. And we always provide through Core Angel International and its affiliate companies workshops for angel investment workshops and academy for the angel investment. Also, we are welcome for partnerships for our ambassador program, where we can have a co-investment with other angels network. Next, please. What about the ARC Angel? ARC Angel, and Cintia is already here. It's a rule created by Core Angel International, coined by Core Angel International, and it's give more engagement for the business angels to support the portfolio startups. We usually do that where we assign one of the business angels who like to join or play the role of ARC Angel assigned from 1 to 3 startups, where he can give them hands-on guidance through meetings that can handled on a monthly basis. The role of Archangel here started from helping them to finding the opportunities, helping them to mitigate any risks that is coming for the startups, helping them after that for in the exits. Those main rules for the Archangels is already supported by our venture studio, Camtex Ventures, where we can have a great access between the Archangels pool and the portfolio in our startups. Mainly, we are bridging the gap between global and the Middle East and Africa region. We help the startups that would like to expand from the global and want to open new entities and new startups in Middle East and Africa, and vice versa, through the network of Core Angel International, of course. And as Cintia have clarified already, one of the biggest benefits for Core Angels international community, the ease of access for global co-investment opportunities, the access for a pool of expertise of global business angels. We find a lot of cases that we have a business angels with us from Europe and USA, a part of our network in Core Angel MEA, and vice versa. I believe that the role that Core Angels is playing in the cross investment is very remarkable, and what we are trying here through Core Angel MEA is to link our region with the opportunities that are provided and backed by Core Angel International. We are always welcome our business angels to be active participant through the Archangel role or through the venture partner to represent the countries that they are actively working in, or through the ambassador program. Thank you, everyone, and you will, if you have any questions, please just put it in the chat. Thank you.
Wow. Boom. So we have reached the Q&A section. As promised, I did ask for people to hold their questions. If you have any questions for Maha and Cintia, if you have any questions for Rolayo, if we can bring you back up, as well as if you have any questions around HOAQ, and I think working with HOAQ. This is a quick segment. I think I'll give it about a quick 5 to 10 minutes. I think we still have on this call for you to be able to engage on any of those questions. To add a bit of clarity, I think, on this, the reason that we are having masterclasses like these, and this one being the first of it, was to showcase the diversity. I think there's a lot of similarity in how angel investing is being capacitated on the continent. You'll see a lot of reporting in terms of the deal signed here. These people are backed by these guys. And there's a lot of people sitting on the sidelines going, this is exciting, but like, how are they doing it? So it was to, first of all, just give you a bit of a glimpse on the inside, get to know some of the angel networks that are functioning and operating and helping startups on the continent in terms of how do they move, what do they do, but also just, again, a sneak peek on the inside also helps you to see how the networks function in the sense of how do they capacitate the members. So once you're inside, once you're ready to bless and release your check, what happens on the inside with the support that they give to the startups, but also with the support that they give to you as an investor. I think I really love being able to hear just the last one about the Archangel role, because I think we've heard a lot on the ecosystem about super angels, you know, those angels that have done 10 to like 40, 50 deals by themselves. Those are called the super angels, and now there's the Archangel role where angels can mentor. So I love really being able to see these kind of designations coming through, because it's really resonating with the fact that there is the experience. We said Africa was a nascent market, and now we're pretty much 10 years deep into angel investing on the continent. And this is how we're doing it, and this is how we're continuing to foster, I think, the collaboration across networks to be able to do it. This is the co-learning that we need to continue to do more of, and to be engaged in more of. Okay. I haven't seen too many questions. I think I've seen mostly comments. So I think I will just ask, I think, a very general question to all three of the panelist groups. So we'll start in the order that we began. So we'll start with Joe, and then we'll go with the Rising Tide, and I think co-angels. But based on the poll, we have a lot of people who are individual investors on the call, but also a lot of people, 18%, have not yet invested, and they're looking for a deal to invest in. So if I'm looking to come knocking at your door, what do I need to have prepared? What is the criteria that you're looking for in the first conversation, and how I need to present myself to you if I'm interested in co-investing with you?
Well, first and foremost, you need to have money to invest. So that's an obvious prerequisite. But what's really, really important is the education, right? You need to know what you're doing. You need to understand the risks that come with angel investing, and you need to take your time with it. So have the money, but just don't invest just yet. Go learn about the asset class, understand it, and just check if it's the right asset class for you. And most of the time, to find out whether it's the right asset class for you is to just try one investment. And we're having that conversation before the call started, which is there's a lot of courses out there that you can take to learn about angel investing, but it's one of those asset classes that you actually learn by doing. So you learn, you have to take the action. You need to write that at even the minimum, like $500, $1,000, just do it. But don't do it before you take the course. Do it after you take the course. So put your learning to use. And it might not be for you. It might not be for you, and that's also fine. But just so have the money, learn, and practice. I think that's how I'll summarize it.
Rolayo?
I mean, I think Joe said a lot. The only other thing I may add to that, speaking broadly, before I speak about Rising Tide, is first of all to understand that angel investing, as I said earlier, it's patient capital. So I think there's a lot of hype in the market now. People think I just put some money and then magically something comes out immediately. It doesn't work that way. You actually have to, as I said, you have to engineer an exit. You have to help the business grow. There's a lot of hand-holding involved. And so if you know that's not for you, and it's fine, it's not necessarily for everyone. So if all the person wants just to put some money in and then let it get out, then perhaps angel investing is not for you, because you have to be actually involved. So even if you're not a super angel or an archangel, you're still an angel. There's still some work, that needs to be done, to help that business grow. So in terms of the ticket size, so as Joe said, so it could be, it's difficult to come in out saying anything less than $1,000, but I mean, we can always have a conversation around that. I don't necessarily think we need to start to lead with the money, because there's a lot of education that's required, first of all. And sometimes the best way, I think, to start off is maybe to join an angel investment, syndication sort of like ours or any other one, and then get involved, spend some time, do some due diligence with the business, see what exactly is involved. And then, okay, maybe this is for me, this is not for me before, you put your money in. That's just one way to look at it. Because even if you don't have the dollars and cents, you do have expertise, right? So the other things that you can actually bring in beyond just, the finances. So I think it's good to look at it broadly.
Thanks, Rolayo. Core angels.
Do you want to take this one, Maha?
Yeah, sure, Cynthia. So from my experience, actually, I see that we have a potential in Africa region for the business angels investment. However, we still need a more educational and awareness about the business angels. my always advice for any investor that want to join, don't try to do it alone. Understand the market that the local markets that you want to invest in. Try to join the workshops first to know the basics of the angel investment. And if you want to join a business angel network, you should know about their history, their portfolio company, their structure. If they do any exit or no, you should know, like if it's they are already part of associations like ABAN or not, or back to like Core Angel International, so they have an opportunity for global expansion and a co-investment opportunity. I have met a lot of international also investor that would like to expand, especially in Africa region. We know all that the region still have a lot of opportunities for the startups and for the fundraising. I find sometimes that they don't know how to start. They don't know how to join and what is the market trends. So they should always have a local partner representing them in the region they want to invest in. Again, when I started to join Core Angel International and launch Core Angel MEA, this was the unique advantage beside a lot of other advantage, but this was very unique about them. We have all the same model, like Cintia said. We have weekly workshops, and we have always experience as a fund leader together. We have always a meeting on a weekly basis where we can already discuss the problem arise from different fund, what is the news trends, what is up. So such networking from a global perspective, I think, is what we needed if we want as a business angels in Africa to expand. Thank you. I'm not sure if you want to add more.
Thank you, Maha. So I think I'll move on to Tahir's question. Tahir is asking a question here, and I'll throw it to the floor. What was the critical mass in volume and number of members before you knew that each of your different structures would be stable?
I can take
Go for it.
This one. So when we started, there was literally 17 people, and we didn't know about structure. So like it was people that we know as a group of people, and my partner Nubi and I were just signing all the documents on behalf of the groups. We knew that had to change when we started seeing people that we didn't know join the community, and we were like, okay, this is not going to fly anymore. You need to find something that legally protects the members, but also ourselves, right? Because when you sign on behalf of a group of people, when something goes wrong, they can come and hold my shirt. That's fine because we know each other. But when you start having people that you don't know and they're asking you questions that you don't really know the answer to, you need to start figuring out legal structures that protects, well, actually 3 parties. It protects you, protects the investors, and it protects the founders, right? And I think we spent about a year trying to figure that out. And to be honest, it wasn't cheap. But yeah, we figured it out at the end. Like one thing that is not often talked about is how expensive these structures are. Like Africa has 54 countries. You had the diaspora, where we all live. Do we set up a Delaware structure? Do we go to Mauritius? Do we go to the UK? Or is it Kigali that we're going to go to now? Or, or do we go to Nigeria? When you start investing cross-border, this gets messy very quickly. So like for anybody who is thinking about starting, start simple. But again, just keep in mind that you need to protect yourself when you're investing with people that you don't know.
Thanks. I think when it comes to the critical mass, I would say, like Joe said, it's not necessarily in terms of the numbers, because you can have 20 friends that know each other and you're cool. But when it now gets to the point where you have people who are coming in who are probably not part of the initial set, and then even if you have your 20 friends, it gets to the point where even as an individual, you don't want to be signing 20 different documents, right? So once you have that many people, then it's clear that, hang on, we need to take a step back and take a second look at this. Is this sustainable? So at what point did you realize, we had to, once you've done the first 3, 4, 5 deals, you realize, hang on, how is this going to keep working, right? How are we going to do this? Because even with those deals, there was a lot of chasing people around. Okay, you sign, no, you sign, then you sign, and then you're sending documents, or you signed that version, I didn't sign that version. A lot of back and forth. So, but the third or fourth time, you realize, this isn't sustainable. We have to look at something that's more long-term, that can actually work for everybody and does protect everyone. And there is going to be a cost. So that cost is also factored into the investment, right? So it goes beyond just the deal size, but also the necessary legalese that's required to protect everybody and make sure everyone's interests are covered. So I hope that answers Tahir's question.
Yes, from our side here in Core Angels, we have, as we are investing in a portfolio, so the angels, they invest in the vehicle and the vehicle invests in the startups. So we always have this discussion when we are planning the launching of a new fund. So just taking the example of Maha. So when we were planning Core Angels Middle East and Africa, we have this acceleration program that brings the leaders that are willing to open this new fund. And one of the things that we analyze and we discuss deeply according to the market they are operating is what does make sense? Does it make sense to have a fund with 20 angel investors, with 50 angel investors, more than 50 is too much to handle, to manage, because they will be all investing together in the same startups, and we want to be like promoting the interaction between the angels and also with the founders. So it's hard when it goes far beyond 50, 60 people. In the other hand, we don't want to have 10 people, even if they can invest very big checks, because having the diversity of angels is really fundamental to support the startups. So if you just have like 10 super angels, this is not the best possibility. So in our acceleration program, we have all these discussions about these trade-offs, like number of angels or ticket size, because they will vary tremendously according to the investment thesis of that fund. And then once we have the first investment committee, the second investment committee, we started seeing that, well, yes, we are ready to go. We have this number of people committed, so we have enough funding to start. We are all rolling funds, so it's not that we fundraise upfront the entire money that we're going to invest. So we just need to have some money and some committed angels to start investing, and then they can reinforce later, then can bring friends or colleagues later, so we can be increasing the money during the time.
Amazing, thank you. Okay, and then there's one last question that has come in from Isaac before I let you all go. The question is, any thoughts from the panel on creating intra-community secondary opportunities to facilitate liquidity within, say, your HOAQ and your Rising Tide, even when your ventures aren't raising around?
Well, secondaries are very difficult to do, because when you look at the underlying documents that we sign, they're not very straightforward, right? And like for folks who sign SAFEs, for example, SAFEs are not equities. They're not like shares. So really and truly, you can't really trade that. When you have shares, you can trade those, but there has to be a secondary market to be able to trade them, and it aligns with the necessary regulations. And so this space is very messy. Me and my team are really trying to like just document this, and we're having a hard time with it. We want to document it, try and then hopefully, build it in the technology that we're building. But it's just very difficult. Very, very few people have solved it. And the way I've seen them do it is they open what you call liquidity windows, right? And they pretty much go to find the buyers. So you need to have buyers ready, and then you find the sellers to be like, okay, well, we have some buyers who's selling. And then that happens within a very short like window, 2 weeks, or like 1 month, and that's it. But I don't know if anybody saw Carta had a secondary product I think it was earlier this year, and there was a huge scandal with like Carter is reaching out to investors like, oh, we had these, shares available, come and buy it. And it was a big mess. So even AngelList, which is probably the biggest platform, at least in the US, I don't know to what extent they've solved this secondary issue. But the demand is there. The how is just very messy. And even messier in Africa because we have so many, like the underlying documents are kind of similar, but they vary from country to country. And like, which regulator are you talking to when you want to sell actual like securities, right? The safe piece, there's also a world where you can like trade safes, but it can happen within like one syndicate. So for example, if myself and say Rolayo, we are part of a syndicate and we invest in a particular deal, it's relatively easy for us to trade on that deal, which is, well, especially also when the valuation of the company, if nothing has changed on the safe, like you write I don't know, like 100K safe, nothing has changed, you can trade those like super easy. But when companies are raising at other valuation caps and this thing is not priced, it's very messy. So if anybody actually knows the answer to this, please, I need your help. I don't have the answer. I'm learning, and like we're talking to some customers who are like, okay, well, when are you gonna build the secondary piece? There's ways around it. We'll probably do it manually a couple of times, and then we'll figure out how to hopefully automate this. Because yeah, it's the messiest question you've asked today. And well, hopefully somebody has the answer here because I don't have the answer.
Joe, I agree with you. This is really something that all the angels are looking for. We at Core Angels, we have experienced this and we have practiced this in a more manual way, but we could succeed in portfolios that were already very advanced, so that you already had some exits, and so you were sure that the portfolio was already valuing more than you have invested, and so we could have this trade. But as you said, usually what we do is suppose that we have someone that it's willing to sell their positions, and then we set up like a window for this intra-market that we call, and then we identify if you have buyers or not, but this is not guaranteed. Okay, this is something that what might happen is that none of the angels that are already in the fund, they want to buy the position. So this is very clear since day one to everyone, like you are investing and it's a very illiquid investment. It's a patient capital, as Rolayo was just mentioning, and you should not count on this money for anything. So but when it happens, we try to solve the issues and we try to promote this sort of intra-market thing. But it's not easy, I might say. And one thing that we want to do right now is if we look for buyers inside the same portfolio and we cannot find. So what we want to do is to make it very systematically in a way that we can reach out to the other funds and say, well, I don't have in Core Angels Mia someone to buy your position, but there is a person that is in another fund of Core Angels and they were very interested in entering this portfolio and they are willing to buy part of the total position. So we are working on this, but I agree with you, this is a challenge. We have also been talking to some funds as building some solutions for buying secondary from angel funds. It's really tough. But I'm sure that we can find a way, and we should look for solutions for that, because if we can solve this, I think we can unlock a lot more people to come and join angel investing as we need. But it's really a hard time. It's not easy.
Nothing to add. Because I think it's a problem we all have, and we're all sort of looking to each other to think maybe he'll solve it or she'll solve it, but apparently none of us have solved it just yet. So
yeah, give me 6 months.
We'll come together and see how best we can actually solve it, because it is a problem, yes, but we don't have the answer just yet.
I think that the role of networks like ABAN or a global like Core Angel International can play a very good role if to arrange and put a structure for the secondary investments. Otherwise, I don't think that as angel networks can do it alone. And especially if we are talking about angel investment network, not even a VCs.
Yes.
Yeah, it's much difficult. Yeah.
Thank you. Thank you so much, everyone. I think that's the cue to close off this call, Fadila. I feel like Maha put you on the spot right there towards the end, saying this is the role for ABAN. This is a role for bodies like ABAN to lead the charge for this. So we're just going to launch a quick poll. Thank you so much, everyone, for joining this call. We hope it has been super informational. We will make the recording available, but we also will make some of these slides available as well when we release the post-event blog. But like I mentioned, we're trying to facilitate a few of these events just to make sure that we get the learning out there, just to make sure that we're asking the questions on open platforms like this to co-create the solutions, but also to co-create the networks in which you can ask different people different questions. So in the chat, we're also just going to quickly drop an interest form. If you're interested in continuing the conversation with Core Angels, with Rising Tide Africa, with HOAQ, please let us know and we will facilitate a structured connection so that you can pick up on this conversation. Or if you're just more interested in terms of what's coming up from the side of ABAN, what's coming up in the ecosystem around angel investing, you're interested in getting started, many of these organizations have mentioned resources that they've created, and some of these are public resources, but also some of these are events that they have coming up in their local ecosystems as well that they can plug. You hear Joe has been at events once every 2 weeks for the past couple of months. So there's a lot happening in the ecosystem. People are outside and networking for co-investment. Thank you. So we've posted our interest form in the chat. So please, if you are interested in getting kept in the loop, complete the interest form and we'll make sure to connect you with these networks, but also other networks. If there are other networks that you're interested in, you're not sure how to get started in reaching out and getting in contact with them. That is it for me. No? Okay, we have one last thing. Fadila, do you want to give a shout out to the survey? Fadila, are you still on here?
Yes, I'm on. Thank you so much, Joe, Rolayo, and Cintia and Maya. It was really very interesting to hear different approaches to angel investing, but you also found out how similar we all are, even though we're located in different country on the continent. And yeah, as you know very well, angel investing is fairly new on the continent, and we have been actually tracking consistently for the past 3 years how angels behave, some of the opportunities that exist, some of the challenges, but also drive policy in making sure that key players that may influence the way in which angel investors behave are aware of the good that angel investors are doing on the continent. So since 2021, we have partnered with the Dutch Ghost Fund to actually bring to light the ABAN Angel Investment Survey. And we have been able to do that in support with the Brighter Bridges and the African Angel Academy. So the 2024 report will be coming up and released in November during the Africa Early Stage Investment Summit in late November. And we are at the point where we need to hear back from angels. We need to understand what they've been doing. And we please urge you to go online and fill out the survey, a very short one. And we have tried to make sure that this survey is very straight to the point and also pretty much engage with individuals on different and relevant topics. And I heard earlier on about secondary market, which is very important. I heard earlier on from Rising Tide about female angels supporting female-owned businesses on the continent. I've heard from Maha and Cintia the importance of consolidating the work that we do in early stage investor summit, early stage investor ecosystem by co-investing with various angel network and which of course will lead into facilitating even the expansion of the companies that are benefiting from this investment. And of course, more and more we're talking about how do we actually exit as angel investors, right? And I think this report will very much uncover this. But to be able to do this, we have to make sure that the angels themselves, those that are actively supporting this ecosystem and driving the agenda of early stage investing on the continent, are taking part. So please go ahead and fill out the form, and I will look forward to sharing the data along with the supporting parties and the team in November during the ACES event, 29th of November, 2024. Thank you so much.
All right, and that's it from our side. Thank you once again very much to Core Angels, to Rising Tide Africa, and to HOAQ for giving us quite a meaty evening. Thank you very much to all of you for sticking around and walking through us on this webinar. We will see you in the next masterclass. Thank you, everyone.
Thank you, Ayanda. Bye-bye. Thank you all.
All right.
Thanks, everyone. Bye-bye.
Thank you. Very good session.